Welcome back to Investing Talk Podcast. Today, we're diving into a really fascinating one, a stock that's, well, pretty unique in the tech and crypto space. We had a question from one of you asking, is strategy a good time to buy now? So that's our mission. We're going to sift through all the recent news, the financials, the upcoming stuff, try to pull out the key signals for you. We've got analyst reports, technical charts, even some juicy rumors to cover. Basically give you the lowdown on the investment case. And hey, before we jump in, if you haven't already, please hit subscribe, maybe like this chat if you find it useful, and drop us a comment. Yeah, definitely let us know if there's another company you'd like us to take a look at next time. Just pop it in the comments.
All right, so strategy. I think we really need to start with what makes them different, Their competitive advantage, it's this dual focus thing they've got going on. They're basically the only major US listed company that's a leader in enterprise analytics software and has this massive direct holding in cryptocurrency.
That's a key point, right?
Yeah.
It's not just a tech company with some Bitcoin on the side. The crypto treasury seems to be driving almost everything, the valuation, the risk profile. And their accumulation plan is, well, aggressive is putting it mildly.
That's incredibly aggressive. As of, October 13th, they were holding 640,250 Bitcoin.
640,000.
Yeah, and the sheer scale of that, we're talking potentially over $70 billion in liquidity based on recent prices. That gives them options, a kind of market presence.
And they have that ambitious goal, the 4242 program.
Right, the 4242. The idea is to get to $84 billion in capital, and this is the wild part, aim to own over 3% of all Bitcoin in existence by 2027.
3% of the total supply. That's huge. What's the thinking there? Is it just about the value, or is there more to it?
Well, that's where it gets strategic, potential controversial. If they actually hit that 3% target, they become a systemic player in the Bitcoin market. Think about it, that could influence market depth, the perception of scarcity. And, holding that much of a decentralized asset, it definitely puts them on the radar of regulators globally.
So it shifts the risk, not just Bitcoin price volatility, but maybe concentration risk, systemic risk down the line.
Precisely. They're betting that scale gives them leverage, maybe even some kind of protection. It's a bold bet.
Okay, let's connect this strategy to their recent financials, because Q2 earlier this year really threw people for a loop.
Oh, it absolutely did. July 31st, they reported earnings per share of $32.60.
$32.60. And the expectation was?
The consensus was actually for a loss, a significant loss. So to beat by that much, mostly driven by the rising value of their Bitcoin, it shocked the market.
And analysts reacted immediately.
Almost overnight. You saw price targets jump, strong buy ratings reiterated or issued. It was a major catalyst.
And that surprise fit into some pretty eye-popping growth numbers too, right?
Yeah, the metrics are almost unbelievable. Trailing 12-month net income growth was like 2,353%.
2,000%.
And year-over-year EPS growth hit 700%, numbers you just don't see often.
But we have to add the caveat there.
Definitely. We absolutely have to clarify. While that growth crushes most software peers, it's overwhelmingly tied to Bitcoin's price going up. It shows the leverage, but it's not traditional operational growth in the same way.
Which brings up the big question. If they're showing these huge paper profits, why the constant need to raise cash?
That's the core of their operational model, really. The reported profit is largely unrealized gains on Bitcoin. To keep buying more Bitcoin, which is their main engine, they need actual cash.
So how do they get it?
They use a pretty sophisticated and very active mix of funding tools. They've expanded their perpetual preferred stock classes, and they're constantly using at-the-market equity offerings, or ATMs.
Okay, break down those ATMs for us. How does that work?
An ATM offering basically lets strategy sell shares of its own stock directly into the open market, often in small batches whenever they think the price is good. It's like having a cash faucet they can turn on quickly to snap up more Bitcoin.
So they're kind of using their stock, which often trades higher than the pure value of their Bitcoin holdings because of the leverage perception.
Exactly.
To buy more of the underlying asset, Bitcoin. It's almost like arbitrage.
That's a good way to put it. And the preferred stock adds another layer. It's sort of like debt. Offers faster cash, maybe less immediate dilution than selling common stock, but it builds up long-term liabilities on the balance sheet.
We saw that recently, right? That October 13th purchase, 220 BTC.
Yep, funded by raising about $27.3 million through those ATM offerings. It shows how continuous this process is. Buy Bitcoin, issue stock or preferreds, repeat.
But that constant issuing does worry investors sometimes. I remember back in September, they bought 850 BTC for almost $100 million.
Right.
And the stock actually dipped afterwards, like 2.5%. Seems like short-term dilution jitters are real.
They are. It's the trade-off they're making. They're prioritizing accumulating the asset, Bitcoin, over keeping the share count absolutely stable. It's a core part of the strategy.
So despite those dilution worries, what's the overall feeling from analysts? Still positive.
Overwhelmingly positive, actually. Looking at the September surveys, you had 12 out of 14 analysts with a strong buy rating.
12 out of 14. That's strong conviction. And the price target?
The average 12-month target is up there at $547.79. So Wall Street still sees significant upside.
And does the stock's recent performance back that up? What are the charts telling us?
Well, the momentum has been incredible. As of early September, the stock was up something like 159% year over year.
Wow.
Yeah. And current forecast models suggest it'll probably trade in a range between, say, $330 and $550 over the next 3 months or so.
Any key levels people should watch?
Definitely. Technical support seems pretty solid around the $330 mark, and resistance is right up near that recent peak, around $543. If things get choppy, those are likely the boundaries.
Okay, solid upside picture, but we absolutely have to talk about the risks. You don't get this kind of potential return without some serious red flags.
Couldn't agree more. Time for the reality check. First big one, debt.
How much are we talking?
Total debt is sitting at $8.16 billion. That's up 112% year over year. Now, the bulls will say, hey, they have $70 billion in assets, but...
But is that $70 billion truly liquid if Bitcoin crashes? If Bitcoin drops 50%, suddenly that's $35 billion in assets against over $8 billion in debt that doesn't shrink. That ratio changes fast.
Exactly. The asset's volatility makes the debt much riskier than in a typical company. And if the stock price falls even harder, raising more capital gets painful.
What's the second red flag?
Free cash flow. Or rather, the lack of it. The FCF yield is deep in the negative, like negative 35.82%.
Negative 35%. That sounds bad.
It looks bad, but it's actually a direct result of their strategy. They're pouring every available cent back into buying Bitcoin. It's not that the underlying software business is failing to generate cash, it's that the treasury strategy consumes it all.
So it's a strategic choice leading to negative FCF, not necessarily operational failure. But it still means less cushion if things go south.
Precisely. Less operational flexibility. And that leads to the biggest risk of all, the elephant in the room.
Which is?
The entire company's fate, its valuation, its reported earnings, everything is utterly dominated by Bitcoin. If Bitcoin takes a sharp, prolonged dive,
it hits their assets hard, forces big write-downs, wipes out those earnings beats we talked about, and likely sends the stock tumbling.
That's the core risk, plain and simple.
Okay, looking ahead then. The next 3 months seem packed with potential triggers for volatility. What's first?
The big one is right around the corner, Q3 earnings. That's scheduled for Thursday, October 30th, after the market closes.
Why is this particular earnings report so critical?
Because it gives us two crucial pieces of information at once. First, you get a look at the performance of the legacy software business. Is it stable, growing, shrinking? But second, and arguably much more important for the stock price, is the mark-to-market impact of their Bitcoin holdings during Q3.
Explain that mark-to-market connection again.
Sure. Basically, accounting rules mean strategy has to report the change in value, the unrealized gains or losses on their massive Bitcoin stack for that quarter. So their reported profit or loss can swing wildly just based on whether Bitcoin went up or down in Q3, even if their software sales were flat.
So analysts will be looking for how much Bitcoin they bought, but also how much the existing stash changed in value.
Exactly. Those MTM swings can dwarf the actual operating results.
Beyond earnings,
Yeah.
What else is on the radar? You mentioned institutional interest.
Yeah, we're seeing signs of growing confidence there. Firms like Heartline Investment Corp, for example, significantly upped their stake recently. That suggests some institutions are getting more comfortable with this as a way to get Bitcoin exposure.
And that institutional flow can impact the price.
Oh, definitely. That's why the ETF and index rebalancing event on November 15th is important. When big funds adjust holdings to match indexes, it can force large buy or sell orders into the market, causing short-term volatility.
And we'll get more insight later.
Yep, the December 13F filings, due around December 12th, will show us who else bought in or sold out during Q3. Gives a clearer picture of institutional sentiment.
Okay, and finally, the fun part, the rumor mill. What's swirling around that could move the stock?
Well, there's always chatter about them making even bigger, maybe leveraged Bitcoin purchases, especially trying to front-run the next halving event.
But the really transformative rumors are about the structure of the company itself, right?
Yes. Two big ones keep popping up. First, the idea that they might sell off or spin off the legacy software business entirely, just become a pure Bitcoin holding company.
Wow.
And second, related to that, is the speculation they might try to formally convert the whole company into something like a spot Bitcoin ETF. Basically, become a regulated fund.
If either of those happens, selling the software or becoming an ETF, that would be a game changer, wouldn't it?
A complete game changer. It would totally rewrite the investment thesis.
Yeah.
You'd remove the software valuation part,
Yeah.
potentially simplify the regulatory picture, and it might attract a whole new class of investors just looking for regulated Bitcoin exposure.
So putting it all together, we've got the huge Bitcoin leverage, the surprising earnings power linked to that, strong technicals, but also significant debt, negative cash flow because of the strategy, dilution concerns, and these potentially transformative rumors. How do we rate it? Is now the time.
Look, our overall analysis keeps it strongly bullish. We'd rate it about an 8.5 out of 10 right now. The core thesis is that you're investing in a management team very skilled at using financial engineering, using their stock premium to acquire more Bitcoin. It looks attractive for a couple of different types of investors. Short-term traders might play the volatility around the Q3 earnings. Long-term holders are betting on continued Bitcoin appreciation and maybe that structural transformation we talked about.
So it really boils down to buying a highly leveraged, highly volatile proxy for Bitcoin itself, run by a team committed to maximizing that exposure. Okay, given all that, especially those rumors about selling the software business or maybe converting to an ETF, here's something to think about as you watch those Q3 results roll in. What would the market value strategy add if they actually did it? If they shed the software side and became just a pure play, maybe regulated public company whose only job was to hold Bitcoin? How would that simplify things? And what kind of new money might it attract? Something to ponder.